Good morning, everyone. Welcome to the live stream with Rob again. Glad to see you all here. Let's go through the markets and let's have a look at what we've got here. So today we've taken the long trade on gold. That looks great. Looks like a fine trade to start the day with. But unfortunately, this trade has kind of been a monster and gone against us a little bit. But I see we are still in the trade on all the products, even on this funded trader account, we are still in the trade, it looks like. So no big deal. Yeah, okay, these are the trade of the days that the members get. So let's have a look at everything else and see what we've got today, see where we'll be going for today. Right, let's have a look at everything else here. Let's see where we are and where we're going. FTSE, as I said in the members video this morning, we're not going anywhere with that today. It's in the middle. I don't think we'll be actually taking a trade there. It kind of just looks a little bit sort of iffy. The US 500 is on the up, and I'm sure you guys are getting used to the Fed announcements now. I don't wait for the news anymore. I don't let the news bother me, and I don't hang my hat on the news. That's for absolute sure, because it just will, it's like you get all this excitement and then it all just settles down at the end of the day anyway. So just trade what you see. Now, you know, we're always trading on the 4-hour charts, so it makes it a lot easier, because if you're trading on 5-minute charts, that's when it gets really kind of tricky. It goes out of control and your trades get stopped out very, very quickly, obviously, and that can be quite a problem. Just let me make sure that the volume's doing what it's supposed to here. Yep, sure is. Everything's fine. Okay, right. Now, let me go down to the Dow Jones. Dow Jones is very similar to the S&P. We're not going to do anything with that. The DAX is long. You can see the DAX is actually still going long. It's kind of bounced off this demand level, and it seems to be continuing on its run. It's in a nice price trend, a nice price action run. It's definitely got some structure, some market structure here. So I wouldn't go against the market structure right now. If it breaks below this demand level, then you can maybe start looking at a change in direction. But for now, everything is going long for now, except this. The France 40s turned short, definitely turned short. It came through, well, it broke through resistance, went up, it's come back with these long red bars. Now, take note of the bars. When they're long, they are strong bars, very strong bars. Morning, Elaine. Welcome. Glad to see you here. These red bars are strong. So, you know, if you've got short little bars, they're just trying to recover. You get these long bars. It means there's a lot of sellers in the market. Breaks back through what was resistance, became support. Now it's resistance again. Goes up, tests it, goes down. This is short. France 40 is definitely on a short trajectory. I know last week, I think it was Rama asked me about volume. I don't trade with volume, but if you do want to trade with volume, just out of interest, you know, if you have a lot of volume with the move, it confirms the move. It's a classic confirmation in the market. But if you have a small amount of volume with a big move, it kind of tells you that the move is not real. It's almost like a fake move. So if you are using volume at any time, that's kind of how you use it, to sort of confirm for you that the move is real or the move is fake. That's what you're looking for at the end of the day. But I'll make a video about volume, particularly because the question was asked recently, but we'll get to that. We'll definitely get to that. So yeah, this is the Nikkei. I took this trade yesterday thinking it would go short from here. The picture looked good to me, just looking at the picture, because it sort of looked like that big red candle and a couple of more candles following it. Looked kind of ominous to me. And I've seen this before in the market, so I thought I'd take the short. But then obviously with all the hype yesterday and all the rubbish in the market, it sort of went back up. So the stop loss is above the resistance. We'll see what happens. I still expect that this will carry on to the downside. US oil is still short, still going down. Still going nowhere, so don't see much hope for that going long anytime soon. There's actually a bit of a kind of a head and shoulders that developed there, but it's not very clear, and it's not even straight, so don't play too much into that. Gold, we took the long trade today because of this demand level. The price went into the demand. There's some money lying here, so we take the long trade out of the gold, and it takes us into a better position. The structure is here. It's been going up all along. Worst case scenario, as it comes back down to the trend resistance, trend support, and then bounces off up there. That's why I put the stop loss below the trend support, just to protect us from that sort of scenario. Then you've got Euro US dollar. Euro US dollar has been going short since it hit resistance, most likely as a result of this double top, which created at the top here. We ended up with a double top. It broke through resistance, came back, broke through resistance, came back, broke through. So it's basically a new resistance at the top here, and it's a double top at the top here. So it's hitting this area, and this, you can actually take this basic resistance that we drew in here and make it much larger. What I would do is actually take this up a little bit, make it a little bit higher, and just run with that, because it seems to be running into this area and running out of steam there, and then it's gone short again. It is hitting this trend resistance. Just be very careful of this Euro US dollar, because it is kind of bullish. I looked at it on the day chart. I think it was the day chart. I looked at it. Yeah. And you can see it's got this structure, this bullish structure, and it's actually on the bullish structure hitting a demand level and also hitting the trend support. So if you look at this picture, it could very well give a nice long trade out of here going straight up. So be very careful of going short on the 4 hour on this Euro US dollar. That's why I haven't gone short on it. I'm thinking more it might actually turn long, might actually become a long trade. So that you've got to be careful of these pictures, because you look at this picture on the lower time frame and you'd say, oh, that looks pretty short. It's in this range. It's going down. When you go and look at the higher time frame, you go and look at the bigger picture, you see it can actually turn on you and go long. Pleasure for sharing. Yeah, I'm glad you guys are enjoying the videos. I'm glad that some people are watching, not everyone. Yeah, look, like I always say to you, win rate is meaningless. Win rate is completely meaningless. You can have a 70% win rate, a 50% win rate, a 30% win rate. It's meaningless, because trading is a 50-50 game. It's all in the mind. It's all in the psychology. So what's important is profitability over time. You've got to make a profit, which is why we keep the stop losses at a certain level, at the same level as much as possible, and we try and make twice as much in our wins. And that's what brings you the profitability. A win rate is meaningless, because you'll have a mishmash of trades where you have been stopped out, or where you've been stopped out at cost, or you've made a small profit, whatever the case. And that's meaningless, because you can take a look at a win rate and say, oh, I've got a 70% win rate, which often happens to me. But it's meaningless, because you need a profitability off that. And it's all in the psychology on how you take your trades. So watch closely as I continue on with my videos and I explain this system to you. We're not trading squiggly lines. We're not trading these little candles. We're not trading these little bars. What you're trading is against other human beings that have got into the stock market, the Forex trading, commodities trading, whatever they're in. Also big institutions and companies that didn't get into the market to lose. They got into the market to win. And you are trading effectively against them. They want to win, you want to win. And you know what? You can't all win at the same time. That's just the way of the world. You cannot all win at the same time. Somebody has to lose for somebody else to win. That's how the stock market works. That's how this whole game works. These markets are created so that some can win and some can lose. And that's why it's a 50-50 game. Everybody believes they've got an edge. Everybody believes they've got the best strategy in the world. And everybody believes that they can win. What we could do here, we could actually do an experiment. Have a $100,000 account. take 10 trades on it, risk $10,000 and see what happens. You'll be surprised. I could actually literally sit here and let you guys pick the trades, not me. Just say to everyone, vote on this trade, vote on that trade, tell me which way you want to go. Pick the trades, put them in, and I guarantee you, just as long as we set the stop losses correctly, every single stop loss the same, and we look for a target that's reasonable to make a profit with, guarantee you make a profit at the end of the day. Chances of you losing all 10 trades, almost zero. So when you say win rate, you'll see in my videos that win rate is meaningless, and a high risk reward, what you got to look at with a high risk reward is, I'm looking for a 2-to-1, but you can't always get it. I'll quite happily trade a 1-to-1, but I'll add to the trade if it goes into profit. For example, this is not a very good risk to reward situation that I'm sitting with here, but it was. I actually did something that I tell you guys not to do, and I moved the stop loss up because I believe that this trade is still valid. But I'm quite happy with a very close risk to reward, because I know if I go into profit, I can add to the trade, I can make the trade bigger, and I can make more money on that trade if it goes positive. But I'm leaving this trade open for that specific purpose. Even on the gold looks like a good long. The risk to reward is really poor here. It's not a great risk to reward. But if it breaks this up here, I'll probably add to the trade, and then the risk to reward will be much better. Also, the stop loss will come up into cost. You know, in some trades, I'll take that lower risk to reward. But on most of my trades, I do prefer to go with a high risk, a better reward than risk. So, for example, a $1,000 risk with a $2,000 reward, because otherwise you're not making money. But sometimes you just have to take the trade because the trade is there. This US dollar, Japanese yen, another one with a big red bar down. If you're halfway up the bar, you know, you kind of like, this is kind of a classic sort of scenario where it recovers with these small, all the buyers are trying to get back in, small green bar, small green bar, small green bar, all the way up here. You get halfway up this long red bar and it starts to fall over, it starts to run out of steam. There's a good possibility this is going to tip over again. But like the Nikkei, where we are in a loss, but you can see it's trying to get back up this long fall, and it's kind of looking like it might tip over and fall over again. Similar kind of scenario. The South African Rand is breaking structure, so I'm not unhappy about that, because this looks like you might get a good long trade in here against this overall long macro downward bearish trend, but it's broken structure. So it'll confirm that with a little bit of a retest, and then it'll probably carry on the other way. Let's just see how that goes. That's an interesting one to watch. Euro, Great British Pound, has been very bearish, and it hasn't shown any signs of becoming unbearish, becoming bullish. There's another long red bar, and those long red bars are deadly. If it gets halfway here, it probably also wants to topple over. US dollar, Canadian dollar looks a bit more long. You see there's some structure developing here. It broke the downward trend and it's heading on the upward side. Australian dollar, US dollar is definitely bullish. It just keeps on going up. Best case scenario, it'll come down to about the 68.80 level and continue on long again. So that's us going through the trades. Those of you that trade Bitcoin, be very cautious. It's broken out of this trend. It's broken out of this railway. And the thing to watch with that is sometimes it'll break back in and continue on with its trade, but sometimes it'll just retest and then it'll start falling. So just be careful of that. It has broken its structure over here, and it could actually turn short on you, which can become quite tricky. So just watch out for that. Don't get caught out with that scenario on Bitcoin. So guys, what can you tell me this week? How's your trading week going? What's been happening? How are we looking? Is everybody looking up and looking strong? The market will always fool you into a false sense of security. It's one of my favorite sayings. You get all secure, You think everything's going fine, and it turns around and it kicks your butt. That's what it always does. The Funded Trader Challenge has not gone well. We got it all the way back up to the 25,000, and then it took a big tumble again with a couple of losses. So that has not gone well. And the only thing I've got open on there is the gold and the Nikkei. So I can't open too many trades on that because, as you know, you're kind of limited to your downside. So we'll see what happens with that. Yes, I love the DAX. Actually, the DAX was one of my favorite trades for a very long time. That's this DE30 here. Same thing. That's what we're on right now, the German DAX. And I made a lot of money out of the DAX in my time. DAX has always made me money. But at the moment, it's just, if I look at the chart and I look at the way of the world and I look at the way things are happening, yes, I don't want to have the supermarket mentality and say, oh, it's expensive or anything like that, because anything that's expensive in the market is good. But if I just look at the DAX, you're going to get a long trade out of this demand level and can continue on upwards, but or are you? Because we are at all-time highs at the moment. And when the market's at all-time highs, I'm actually quite cautious. That's why I've got less trades in at the moment, because I'm very cautious when a market has hit levels like this. And it's, you see, when the Fed in America, for example, and I know it's not related to the DAX, but the DAX tends to follow the US and that sort of thing. And if you look at when interest rates were rising, interestingly enough, the economists would have called the end of the world and markets would have gone down, but you'll notice the markets went up. They kept on going up. And that's kind of the point, is they were raising interest rates to protect the inflation, to fix the economy, and the markets got excited about that. Now you can kind of expect the inverse situation when they start bringing these interest rates down. They're dropping interest rates. So when they drop interest rates, you start thinking, ooh, the markets are going to go up. They're going to go mad. They're going to go crazy, but you're going to get the opposite. They're going to start sort of leveling out, recorrecting, and coming back into place. So you're going to get the inverse of what you're expecting. So just be careful of that. You know, there's a lot of hype around and people get excited. That's why I say I used to hang my hat on the news, and then I realized that the news just messes your head around and you get confused. So just be very careful of that. The only news you really should be interested in at the end of the day is if the world is ending, or there's a big world war coming out, or there's a bank that's gone bankrupt or something like that. That will affect your trading big time. But things like interest rate moves and economic moves and Fed's chairman talking and things like that, although they'll affect it short term, in the long term things will settle and they'll come back to normal. So be very careful of those kinds of news events. They'll shake you around while you're trading, but later on it will settle out. And particularly when you're day trading on shorter time frames. You know, when I started trading 30 years ago, we didn't trade little time frames. I mean, we only traded on a daily basis. It's like what we call investing these days. In fact, we're investors now. And I've been through my time of trading 5-minute charts and 15-minute charts and 30-minute charts and so on. And you know, it's a stressful game. It's a tough game, and that's why I trade the 4-hour charts. The 4-hour charts make it easy for me. I can put a trade in, walk away, and we'll see what happens. So, you know, if they, you see, that's what I just said to you now. You've asked the question, in your experience, what's the lag time between rate cuts and stock market rallies? The market's not going to rally because of a rate cut. It's going to have a short-term knee-jerk reaction. They're gonna cut the rate and everyone's gonna get in and buy the market, and it's almost immediate. You know, it jumps. You get this knee-jerk reaction. And then effectively it starts to recover, it starts to correct. And what you've got to understand is that the market is not controlled by interest rate moves. It's not controlled by interest rates going up interest rates going down. It's controlled by money flow. It's controlled by how much money is in the reserves. It's controlled by the amount of money that the country spends, the amount of taxes they get in, the amount of money they have to spend on paying people in the government jobs and the army and so on and so on. So at the end of the day, the economy of the country and the way the country moves is based very much on the money flowing around in the country, not the interest rates as such. And that's where we get confused. Economists will tout this whole load of stuff to you about interest rates going up and interest rates going down. But at the end of the day, the state of the country and the state of all the businesses in that country are what affects your indexes, what affects your currencies, what affects your businesses at the end of the day. For example, if the country's in dire straits, Amazon can't make money. You know what I mean? So, like, Coca-Cola makes money based on a good economy that they're working within. And it's not, the inflation rates are a result of that. They're a result of the country's doing well, so we can charge people less for the money and that sort of thing. So it's kind of like a signature sign for traders that things are good or things are bad. But you do kind of find the inverse situation when they drop interest rates and the market bounces up and then it settles, and then eventually you start to see corrections coming into place. And it's also got a hell of a lot to do with the amount of people that are employed, the amount of people that are unemployed. The jobs figures are quite important because they give you a signal as well as to how well the country's economy is actually doing. How's it going? And hey, Rob and Carlos here as well. Yeah, fantastic. Got some people back. That's fantastic. I see there's a big yellow line on my buffering thing here. So hopefully it doesn't go off or anything like that. We have been having a few problems with our internet because we had some big storms here. And it's funny, when we get a lot of wind and we get a lot of storms, my internet seems to mess around a little bit. I don't know why, but I suppose it's got something to do with things blowing around. It's not technology that I'm 100% sure of or whatever. But there's a sign here that says it's not maintaining smooth buffering at the moment. So if you're getting bad buffering, apologies. It's probably got something to do with the line or whatever the case, but it'll come right. It normally does. It normally sort of settles itself down. It's crazy for me as well because, I watch all my TV shows and everything and all my sport and everything on the internet. I don't watch it any other way. It's all online. So, and when it goes bad, it's annoying, to be quite honest with you. Okay, so how's our gold trade doing? I don't know how many of you got into the long gold trade. How many are going long? How many of you are going short? And what trades are you guys picking today? Is there anything that you like? This is the trade of the day that I give to the members. All the members get this every day. So this is the way I picked the trades today. So let's see what your thoughts are. If you've got any thoughts on that, let me know. I'm still trading on this funded trader markets. Yeah, I did leave a link for you guys down there if you want to get into this as well. But this is for me checking out the guys that are trading funded trading to see if it's possible and what the difficulties are with funded trading, because it is completely different to trading with your own money. And I never realized that until I actually tried it out. For those of you South African guys that are here that wanted to get an investment account, I did leave a link now in the description box for you guys with Easy Equities, because they're the cheapest on earth and you can just invest. You can invest in England, America, South Africa, wherever you want. And their prices are fantastic. They'll also give you $50 to start and all that sort of thing. So personally, actually, I don't get much back for it. You get a discount. For me, they're just like, hey, I'm a cool guy. But I just thought a few of you guys asked where you can invest. There's no charts, there's no nothing. It's just an investment thing where you can go and buy, for example, McDonald's or Coca-Cola or whatever shares and keep them and put them in the bag forever. And it's like a savings account for you. You can sell them when you want to. You get the dividends like a normal, brokerage account. But somebody was asking me about South Africa, and I just put that in there so that you guys can get that. Yeah, okay. So how long did it take you before you could manage such a long watch list? Yeah, not long. I think if you've been trading for a year, you just know the instruments. You just, you know, you. This is actually a short watch list. This is just my quick watch list. I go through so many other trades as well because you get these a lot of guys. I don't know about you guys. I don't know how you guys operate, but there's a lot of guys out there that kind of get up at 4 in the morning or 5 in the morning and start their day and do this research and do that research and go to the gym and all that. And yeah, I'm not one of those guys. I don't see the purpose or the need. I can do most of my research in a matter of no time. It doesn't take me long to look at a chart and say, oh, that's going up or that's going down. So um, anyone who's spending hours on that kind of research, obviously you're starting out. And I just want to say that it's kind of unnecessary. You don't really need to do that, to be honest with you. You can just spend half an hour looking at the charts and sort it out. So yeah, I get up late. I'm not one of those guys that gets up at first thing in the morning and rushes up because there's really trading. There's not a lot to do. It's not like being an accountant or a lawyer or having appointments or anything, or being a mechanic or anything like that, or a doctor. This is on your own time. You can do this on your own time, and that's actually one of the reasons I actually started making these videos is because I had the time. Firstly, I did it because I got sick and tired of people telling people that you can make $1 million overnight, and that's a lie. This is a career. You have to learn how to do this. It takes time. And I can see by the amount of maybe subscribers and followers that I've got that that's not the popular, how can I put this? Not the popular way of putting it forward to people. That's not what people want to hear. People want to hear that you can trade a 5-minute chart and you can make $100,000 a day, and you're going to drive Lamborghinis and Porsches, and money's just going to fall out the sky, and you're not going to know what to do with it. And those are the videos that I kept seeing, and I decided to start making these videos because I thought, I got to tell you guys the truth. That's not true. That's not how it works. This is real life. This is really something that's not easy to do. You don't do this overnight. And the reason it's not easy, doing the charts is easy. Doing the system, following my system is easy. Getting it around your mind, being able to do it psychologically, that's the difficult part. So that's the problem is, and I actually started doing the videos because I know I've got a lot of time to do it. I do like to go out and do my thing and whatnot, but there's enough time, and you really don't need this in this game. You don't need to be getting up at 4 o'clock in the morning. My business plan is in my head. I don't write it down. It's in my head. I know my business plan, and I've told you guys my business plan is pretty straightforward, pretty simple. Sometimes the gold and the US dollar shows no. Both go up in the same direction. You say the US dollar CHF. Let's see. I haven't really looked at that, to be honest with you. That looks completely different to me. Say US dollar. That's XAU, sorry. XAU USD. Oh, it's gold. Yeah. So, okay, Rob, I'm not understanding your question. No, there's no correlation. No. So, yeah, this is the US dollar Swiss franc. That's gold. Gold is gold. Don't need correlation there. Gold has got its own price. Not quite with you on the question. Currency does its own thing. So yeah, I don't know. I can't answer that. Never thought about anything like that, to be perfectly honest with you. Not something that actually has ever concerned me. And at the moment, gold has gone into a wee bit of a loss there. Eh? There's always a chance that this will go down to this trend support down here and bounce on upwards. So let's see. But it'd be great if it just goes straight up, won't it? Be unusual for it just to go straight into profit, because you guys all know when you take a trade, it never goes straight into profit, doesn't it? It always like bounces around, takes you a little bit into the red before it goes into profit. For example, this trade is a good example of that. You know, it really takes you into the red before it takes you in the way you wanted it to go in the first place. Okay. But oil is still going down, eh? Oil is heading down into the doldrums. The negative correlation, it doesn't show sometimes. I can't answer that for you. I don't know, to be honest with you. I haven't looked at it. It's not something that's ever come across my path. Something I've ever picked up on. So yeah, no, I don't know. Sometimes you just gotta look at what you see and just go with what you see. Not everything makes sense sometimes. Not everything makes sense. But you go with what you see. And that's how it goes. Right, so as I said, what are you guys trading today? You got anything on the go? Anything you've seen that you like? Anybody long on the Germany DAX? I was looking at a long here, didn't take it, like I said, because it just felt so overbought. Yeah, you know, if you start looking for reasons for things, remember, it kind of takes up your mind. Yeah, it could be. You know, it's not impossible. Could be aggressive buyers and sellers. It's just, you know, I don't look for reasons for things like that, because it's not something that will affect you that badly. It's don't get too complicated. Don't get overcomplicated with things. It's just going to affect your trading at the end of the day. If you look for reasons for things not to happen or things to happen, even if you're just looking at the technical chart, I find that if you start looking for a reason not to take the trade, you'll find one. What you know with trading, the funny thing is, over the years I've found is there's two opposing views to every single trade. For example, I will look at this and say I'm going to take this trade long because this is gold and it looks like a good long trade. And somebody else will look at it and say, I'm going to take that trade short because I can see a completely different picture. Maybe he's using a different system. And that's what makes the market 50-50 at the end of the day. There's two opposing views to every single trade. You're trading the divergence, Andy. Okay. So, yeah, divergence, that you don't get a lot of opportunities to trade divergence. It's actually quite, you know, when they do come about, it's interesting if you can get a good one. But over the years, I found that the divergence doesn't really work that well for me. It tends to fail more often than it wins. Short on the DAX for a scalp. Are you short on the DAX? Oh, you're a brave, brave, brave person. That's a very brave trade. Okay, you're short on the DAX for a scalp. Make sure it's a scalp. Watch it very closely, because this DAX is in a very bullish trend. It has not broken its trend. It's in a strong trend. and it's in a flag pattern which will resolve to the upside. So just be very careful of your scalp here. I know it's a brilliant gamble if it pays off. I mean, if this thing suddenly drops because of some silly news item, brilliant. But you are against it, eh? You are totally against it. Are you out again? Okay, fantastic. I wouldn't want to stay in there for long. I'd be nervous about that. That would kill me. I wouldn't be able to stay in there. No, definitely not. I wouldn't want to stay into that. That is very, very scary. I'll tell you who's missing today. Rama's missing today. Don't see her here. And I know she wanted to know about how to trade volume. So, yeah, that would be interesting. Yeah, scalping. That's always fun. Long on the US dollar, Japanese yen. Yeah, let's have a look there. Okay. Ooh, it started to turn. This is the one I was talking about earlier, which is a bit like the Nikkei, which I'm kind of short on. Just watch out here because you've got this long bunch of sellers, this long red, strong red candle, and the buyers have been trying to get back, and you're halfway up the candle. And I'm always wary of halfway up the candle here, halfway back, because it tends to topple. So just watch out for that. Yeah, no, divergence can work. I just don't. Whenever I played divergence, I always found there wasn't as much opportunity as there is with, say, just price action and support and resistance or trend or whatever. But divergence, I found, well, when I did quite a few trades on divergence, a lot of them failed. There are quite a few that work. But what do you use for your divergence? RSI or stochastic? The MACD, normally RSI. But you've got to trade within the levels on the RSI to be successful with the divergence. You take the divergence and it's outside of the levels, then it kind of fails quite often. You know, 5-minute trading is a disaster. All through my career, like I said, 30 years ago when we started, we only did day trading. I mean, we traded every day, not day trading, and it's now known as an investment. And through the years, I did the 5 minutes, the 15 minutes, and all that. And it's just, it happens. Everything's just happening. And the news knocks it this way and knocks it that way. It's much easier just doing the 4-hour and swing trading and position trading and leaving it. Are using the stochastic? Okay, no, that's cool. The RSI, I've used the RSI a lot on divergence because the RSI is obviously a very accurate indicator. But I like the stochastic. Stochastic is good and it gives you a lot of other information as well. But what I do find using the MACD and the stochastic and those types of indicators is they're lagging indicators 9 times out of 10. And the reason you don't see them on my charts, call it naked trading, is because of the whole scenario of what I said to Rabab earlier when he's trying to find out why something's happening. You know, if I stick all those indicators on this chart, there'll be 25 reasons why I should or shouldn't take this trade. And like I said to you, every single trade has got an opposing view. So some people will want to take the long trade, some people want to take the short trade. But if you've got all those indicators on your chart and you're trading with 2 or 3 different systems, you're not going to take a trade because your psychology is going to keep blocking you out from taking the trade. As I said to you when I started here, and what maybe a lot of you weren't on the video when we started, is if we were to sit here right now and I was to say to you guys, you pick 10 trades for me and we take 10 trades on this account and see what happens, there's a good chance we're going to make a profit. And I'm not even picking the trades. You know, you pick 5 this way and we'll pick 10 trades and 5 will lose and 5 will win. And we just got to put the stop loss at the same level right through the whole 10 trades, put the take profit at double the stop loss. You know what? We're probably going to make a profit. So it's actually much easier to take as much off of your charts as possible, put it behind you and start to read the picture and take your trades based on what you see. But it does take a long time to be able to see these pictures quite easily. Yeah, no, look, I don't, that's why I don't like to put all these extra things on my chart, is because it confuses the issue. It makes you start thinking twice about every single trade. For example, I don't know, I could go into gold here, for example, when I was taking the trade this morning, and I could say, put a couple of indicators on here. I could put divergence on, etc. And I can almost guarantee you it'll probably put me off the trade. Probably say to me, no, don't take the trade. But if I take all the indicators away and I just look at the big picture here, I'm looking at a full-on bullish structure. I'm looking at a demand level. I'm looking at this some money lying here from the big institutions. This could be a good long trade. Doesn't mean I'm right. It's 50-50, but it looks good. And then if I take it to the day chart, which will give you even more structure, it looks clear to me. It looks very nice. It looks like she's just been running up nicely on the day chart as well. So it just makes it so much simpler to take all the crazy indicators out. Believe me, guys, I've tried all the indicators. I've used all the indicators. In my career, man, I used moving averages, moving average crossovers. I've used the Fibonacci systems, the Ichimoku, I can't even pronounce it. I used that system, which is actually a great system. It's fantastic. The MACD, the stochastic, the RSI, volume trading, just to name but a few. I've been through it, and I ended up going back to very much I think, sorry guys, just excuse me a second. Oh, that happens. Just had to fix something there, because clearly, yeah, that's quite an irritating thing that happens. Hopefully it all comes back to normal now. Sorry guys, picture will have disappeared for a second. It'll come back now. Should come back in a sec. Yeah, there you go. It's back. All right, that's cool. Okay, there's a delay over there. That's probably one of the issues. Yeah. Okay. See, it's cutting off my head a little bit. Okay, let's see if it comes back now. All right, so where was I before all that took place? Before I left the chair. Yeah. Kevin. Yeah, Kevin, you're doing it right. Absolutely. You're doing it perfect. That's the way to go. I don't mark anything on the charts. I just look at it and study. That's the way to go. Has to break a level and also change your state of delivery. Yeah, Andy, you're trading a system. Don't change your system if it's working for you. I always advocate that changing your system is one of the biggest mistakes that you can make if you've got something that's working for you. You know what people tend to do with their systems? And I found this really often through the years with other traders, and I've done it myself as well. Obviously, I've made all the same mistakes. But what you do is you lose a couple of trades. And the first thing you blame is the system, not you. But it's actually you that's failing. But you blame the system. My system must be faulty. There must be something wrong. So you immediately go and look for some information and you tweak the system. And then it wins for a while and then it fails again, and you go back and you tweak the system, and then you decide that system's not working. And then you try another system because that one looks better than your system. And it just becomes a mishmash of issues, which is why I basically hardly use any indicators at all anymore, and why I just trade on price action. But it's not about a system at the end of the day. It's about you. It's about how you approach your trading. It's about how you plan your losses and your wins, and how you take your stop losses, and how your psychology works, and how you approach a system. So don't change the system every 5 minutes. every single system out there just about most likely will work. I don't like using indicators because they're normally lagging and you leave some on the table. But, you know, if you've got something that's working for you, then you stick to it and you use it, because it's all you've got to learn from there is how you approach it with your psychology, how you measure your risk. And if you can manage your risk and you can understand that you need to manage your risk, then you'll be profitable in the long run. Morning, Nkosi. How's it going? Welcome, man. Welcome. You've come in about 15 minutes in, eh? How long are we in? No, we're actually half an hour in. Maybe a bit longer, 45 minutes in. We've been here quite a while. Yeah, geez, time flies, eh? Time flies. So, yeah, that's why I say it's absolutely. And Nkosi, I presume you're in South Africa, eh? Looks like with that name, unless you've moved countries. You're a fellow countryman. Right, so, okay, so the funded trader account is $100 down. Right. GBP CAD, because I was on early entry, but never I jumped on Tesla. No change of system. Tesla, trading Tesla. It's a nice. I actually use the actual shares as investments. I don't really bother to trade them much, but yeah, trading them, you can trade them. I sort of buy them and look away. Okay, so my Nikkei is not doing so well. And the gold is, yeah, okay, it'll do something. Ah, Chipple, there you are. Okay, sorry, bud, I didn't recognize you there. Fantastic. Welcome, man, welcome. That's good news to have you. Smashing. Okay. So, what were we talking about before we went completely crazy? Okay. So, Andy, do you only trade with divergence, or do you use any other fantastic smashing systems in your trading? I'm glad. Yeah, simple buy gold. That's it. That's what I mean. I bought gold. That's the one. I think it'll do well. Could be wrong, but it looks kind of right. So, yeah, let's see how we go. See if that one works out. Could do with something working out this week. Help a bit. Where's the euro US dollar? Okay, yeah, there we go. So be careful on the shorts on this, guys, because like I showed you earlier, go to the day chart and look at this Oki, and you get a completely different picture. This guy looks like it'll want to come out of there and head back up. So just be careful of the euro US dollar if you're looking at shorts, eh? Make sure you look at the day chart on that one, because it looks great on the 4-hour chart. It's terrible on the day chart. Yeah, it does happen because these markets are made, and each broker's got its own thing. The IG charts should be pretty similar. I noticed I've used the IG charts before, so I've got an IG account. So, yeah, they're not that different. I mean, you've got all this stuff and whatnot, and you might have slightly different instruments from time to time. For example, the US 500 I think is different on IG. The DAX, the DE30 is the DAX on IG. I think the currencies should be pretty much the same. But I find even with this funded trader account that we've got here, I actually found, I don't know if it's them or what, but sometimes the prices are even different. So it depends who's making the market, who's putting the market together, and which product they got. While some of these things look the same, they're not always the same. Guys can mess you around. What did I do? Did I just move my gold over there? Oh, that's a big mistake. Put it back. Okay. Right. Yeah, they should be similar. Time delays as well. But yeah, should be similar. Should be the same. But actual using them, Should be the same, should be pretty much the same. So, but I like IG. They're actually a nice company, not bad. Just watch your spreads. Also spreads, spreads and swaps. Depends how they put their spreads, that sort of thing. What kind of deal you got, all that. It all counts. It all counts. So just watch out for that. No, I don't enter every trade. No, definitely not. I've got a list of trades here. I look in the morning. These are my favorite trades. And I decide, look, I put these out to the members, the guys that have joined the membership, because, I mean, they are part of the membership. So they get this list of what I've looked at for myself. This list, all it tells me is whether I want to buy or sell that product on any given day. And it changes every day. Every single day you look at the market and it changes. So no, I don't go and buy everything or sell everything. If I look at something, I'll say that looks like it might be a sell today. For example, Euro US dollar looks like it might be a buy today. But as you can see, and we can both see in this particular situation, I've looked at it as a buy because I went on my research this morning and I looked and I saw, hang on, this looks like a buy on the day chart. And I've gone back to the 4-hour chart. I'm sitting looking at this picture. And if I was just sitting looking at this picture, I'd probably sell it. But actually, I want to buy it. And I'm looking at it thinking, okay, let me see. There's no chance here at the moment. You can't buy it or sell it or do anything with it right now. So I'm not just going to buy or sell it. There's no point to that. So yeah, I've got my idea of what I want to do with it. But like, for example, US dollar, Japanese yen, I might want to sell it. But I'm not selling it yet because that bar hasn't closed. It's got to confirm with a closed bar before I take a sell on that. South African rand I want to buy, but I'm waiting for it to retest before I buy. So there's a lot of things I'm waiting for before I'll actually take the trade. So no, I won't just jump into trades for the sake of jumping into trades. I've got a policy with trading, and that is wait for the trade to come to you. Because when you chase the trades, this tends to happen to you. But I didn't chase this trade. It did look good. It did look like a sell when I took it. But okay, I'm just saying, when you chase the trades, you tend to end up with a trade going against you. This trade I waited for, and I think lots of you waited for it with me, gold. Lots of guys were taking longs at this top here. And I said, I'm waiting for it to get back to this demand level, and then we can go long. So I waited for it all the way to get back into here. And when it got back into here, I'm excited to say, ooh, wait for a green bar. Green bar confirms, got a long trade, we can go. Simple as that. So, you get your green confirm bar, and then your next bar, you can look at and say, okay, I can take the long trade here. Patience is a big part of trading, massive part of trading. And that's why so many people end up trading 5-minute charts, is because they're impatient. Because we want instant gratification, because we want it to happen now. But if you learn to trade like I did, then you would know that there's no such thing as instant gratification. I would have to buy the newspaper in the evening, look at all the stocks, and say, okay, tomorrow morning I'm going to phone my broker and I'm going to buy that, and I'm going to buy that, and I'm going to buy that. It's what we call investing these days. In those days, we called it trading. And then in the morning, I'd pick up the phone the guy, and say, I want these shares, and he'd buy them on the floor for me. And then I'd own those shares. And then the following evening, I'd get the newspaper and see how they're doing. It would take days for a trade to play out, Wouldn't play out in the same day. The next day, I'd be selling and buying again in the morning and waiting for the afternoon newspaper so I could see how my shares did. There was no computers. There was no fancy fandangled stuff. So the instant gratification that we've got these days is immense. The unfortunate thing is it takes a lot of people's money, and that's why so many people are losing these days. We didn't have this lose rate back in those days. Our spreads were massive. I mean, it was 7 points between the buy and the sell. It was crazy. These days you can get 2 points. And if you think about it, the oaks are just taking the oaks money these days, because you get into 5-minute trading, and you start to realize that 99% of people are losing money on that, because you can't really call a reliable direction on a 5-minute chart. Your reliable direction is on the day chart, but you're trading on the 5-minute chart. You're trading on a candle. You're trading on what you think is going to happen. Very much a 50-50 there. It's like, oh, it's going to go long. Let's see what happens. Scalping as such. But that's what's happening these days, is everybody's scalping. Everybody's getting into the markets as a scalper, and it's taking a lot of people's money. I got to say, you got to learn to be patient. You got to learn to do this slow. You've got to learn to wait for the market to come to you, and for your psychology to get around how it works. For example, this Nikkei goes against me. It's trading against me, but it's okay, because it's the big picture I'm looking at. If I take a loss, it's part of my losses, but it's the big picture I'm looking at. I'm looking at the big picture of it coming over, taking me a profit, and that's what, there's no rush. It'll get there. Same with the gold. I'm looking at the big picture here. Look, if it goes the other way, it's invalid. It's going down, because then, like, it's broken through. It's as simple as that. But on a 5-minute, you can't get this reliable information. On a 5-minute, you'll be jumping to the right, jumping to the left. You won't know which way this is going on a 5-minute. Yeah, you see the Bitcoin, as I said earlier, Goro, I was looking at it for the people that trade Bitcoin, and I said, be careful. And I actually said it for a long time now. It's been great. It's been in this nice trend. It's been running beautifully in this trend, but it's broken out of the railways. It's broken out of the trend, and it's coming back to retest, and there's a good possibility that it's going to head on down. So just be careful of Bitcoin at the moment on the trading side. I actually looked at it a while back and thought that it was going to actually come back to about 45,000, but it defeated that, and it kept on going up. I'm not a big fan of Bitcoin, never have been, but when I look at that, that is definitely a bullish trend. But if you look at the day chart, you see there's a big resistance level coming across here, and it's kind of run out of steam. It looks like it's breaking to the downside, and it looks like it's possibly going to break down to this 52 as a big support down here. So on the day level, it's showing that it's running out of steam. So just be careful. You go back to the 4-hour, you can see it's broken out of your fancy trend. It's no longer in structure. It's broken through the structure. So on Bitcoin, be aware there is a possible bearish scenario. And funnily enough, when that gets bearish, a lot of other things get bearish as well. So keep your eyes on it. Keep your eyes on it. I don't know how many of you guys actually invest in Bitcoin. I personally don't, because as you guys know, I believe it's fresh air, and it doesn't have a strong asset value for me. So yeah. There you go. Sometimes you got to do that, Kevin. You just got to walk away. You'll remember I said to you, I think I said it to you last week, that if I lose 3 trades in a day, I walk away. I walk away. I won't trade again, because I know something's wrong. Something's not working. A long time ago. Yeah, have you ever traded options contracts? A long time ago. Very long time ago. I used to know this guy, Garth, and he used to have this fancy system for options. I tell you what. And I couldn't possibly repeat it to you, and it was so confusing. But he would buy and sell and put a whole bunch together against each other. He couldn't lose. The trade couldn't lose. He had this option scheme that was just amazing. I don't know how he did it. It was crazy. So no matter which way the trade went, he was going to win. It was just amazing. But yeah, I don't bother with that now because in South Africa I've got access to contracts, and contracts are so much better to trade because I can just go with the market. I don't have to wait for an option to play out. So I can get in and out and do what I want, and that's no. I used to, but not anymore. I like my contracts. I like my contracts for difference. Much easier to trade, and then the only other thing that I have is my investments, my investment account. Like I said to you guys that are South African, I left a link for you to Easy Equities where I think they'll give you $50 if you open an account or something like that. It's in the description if you want to do investments. Just remember, it's not a charting or a trading package or anything. It's just if you want to buy like McDonald's or Coca-Cola or, and keep it forever and come back to it in 10 years and see what it's worth. I have that account as well, and I add to it every month, and it grows and it grows, and it's just gets bigger and bigger and bigger, and it's brilliant. And that's the way to actually invest or trade. Don't bother with trading. Just keep loading up those investment accounts. Those make lots of money for you. It's like a pension, to be honest with you. Um, yes, no, Kevin, you're quite right. So many people on the internet, how much money you can make with crypto. It's just the same as the trading guys. They're trying to promote something to you. Um, yeah, I mean, really, guys, what are they saying? Why are they trying to promote it to you in the first place? Uh, no, it's all rubbish. Buy this and make $1 million. Buy that and that. Why? No, I don't think so. I don't believe that. That's not true in the least. And crypto, yeah. Look, I'm not a big fan of the Bitcoin, crypto, Ethernet, whatever thing. Sorry, Ethereum. I couldn't pronounce it. But anyway, all of these cryptos for me are they don't have asset value. They don't hold any reserve value. I just can't see the value in the product as an investment, so I won't invest in it. Trading it is just like trading it here. You can trade it here. BlackRock's got a product now. JP Morgan's got a product now. Even they don't believe in it. So an ETF, I believe. Yeah. 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 Just like trading, they're everywhere. It's nice. Yeah, you're right, Kevin. It's exactly why I put these videos together, and nobody wants to hear what I'm saying. That's for sure. If they did, I'd have 1 million subscribers and people following me, and no, nobody's interested in what I want to say. They're interested in that young guy that's out there with his showing off a Lamborghini and a Rolls Royce and showing you that you can turn $1,000 into $1 million. That's what people want to hear. People want to hear that you can take a 5-minute chart and you can just like load money on it, and it's like a casino or a one-arm bandit. You just pull the arm and the money just comes out. Actually, you don't even pull the arm anymore. I walked through one of these casinos the other day because I went to pick up my son at a restaurant. And I saw these people sitting there and they're just pressing buttons on these one-arm bandits. I felt so sorry for them, really. I can see it was their salary they're putting into these machines there. My goodness me, it's sad. But yeah, no, it's the stock market is not a one-arm bandit. It's a career. You learn how to do this. You can make a living out of it, but a normal living, to be quite honest with you. You can make a lot of money, let me be honest. The investment side of it, like I told you about now, where you just stick money away every month, when you come back in 10, 20 years, it actually is worth quite a lot, and it's paying you in dividends, and the actual investment has grown to quite an immense size. In fact, had I realized this when I started investing all those years ago, I probably wouldn't even have bothered with trading. I'd have just stuck all the money away because that's where all the money is at the end of the day. But trading's fun, and that's why we trade. We trade because it's fun, and you can make a quick buck on the side with it as well. So, yeah. Yes, Kevin, I'll leave a trade open through the night. I did it with a net guy last night, for example. I'll leave trades open overnight because The time period where these trades stop, or most of these products, I don't take products that close for hours. Like, for example, that's why I don't really trade on shares. I'll trade on, I'll invest in shares. But on the indexes and the currencies and the commodities, there I'll trade because I can leave them overnight, and most of them will only shut down for about an hour. So the risk is not that bad because, I mean, you're talking about an hour at the end of the day where the product might be shut down and your stop loss might not be able to be taken out. But the other 23 hours of the day, that product is open, your stop loss is valid. So if anything happens while you're sleeping, anything happens while you're not looking, anything happens while you're out to dinner or down at the beach, it's going to take out your stop loss, and you're only going to lose the amount that you paid for the trade. But on the weekend, that's the danger of the weekend is your stop loss is not valid over the weekend. And if things go wrong over the weekend, you come back on Monday morning, man, it can open up so far away from your entry price. It's scary. So that's why the weekends are problematic for me. Believe me, I'm risky. I gamble on the weekends sometimes and leave a trade on. Yeah, absolutely. Look, Rabab, what I actually teach people about buying stocks on a proper investment is take Tesla, for example. Okay, if you want to buy this on an investment, I mean, you can use the methods that we use here and say, oh, this looks like a great investment. What I'll normally do is I'll add an indicator, moving average. I don't even know how to put these things on anymore. Exponential moving average is probably quite decent, and we'll put 2 on there. Okay, and then let's just have a look at the settings of the moving average. It's an EMA. The blue one I'll make purple, and I'll make it a 20-day. A 50-day, I mean, sorry, 50-day moving average. So that's your 50-day moving average. Okay, let's make the line a bit thicker so we can see what we're doing. Yeah, I'm just doing this quickly. There's your 50-day moving average. Then you want a 200-day moving average. Settings. Let's make it yellow. I always make the 200-day moving average yellow. It's just me. Let's make it a bit thicker as well so we can see it. And let's make it a 200-day moving average. 200-day moving average. Okay. So there's your 200-day moving average. There's your 50-day moving average. Now, the simple policy of investing is this. Go and have a look. Check the dividend yield. If you're happy with that, it's paying out so much % per annum. Take a look at the price to earnings ratio. A good price to earnings ratio, all my years, has always been below 15. Anything above that is quite high, but it doesn't really matter. It's not that important. Okay. The earnings yield, how much money it's getting back. If you want to learn about all that stuff, sit and read up on it. Okay. It's quite important to know that stuff when you're investing. If a company's worth what you're paying for it, what a price to earnings ratio tells you whether the company's expensive or cheap. But we don't have a supermarket mentality, but that's how you determine if a price is good or bad, by working on the financials, looking at the financials. Where's the company going? Do you feel like it's a good company? 9 times out of 10, you don't even have to do that, because you look at some companies and you just know that they're actually worth something, like Nvidia, Tesla, these types of companies. But which one are we looking at now? Tesla, right? So, but to look at it from a technical perspective, if the 50-day moving average is above the 200-day moving average, it's a buy. And if the 50-day moving average is below the 200-day moving average, it's not a buy. And when it goes through the 200-day moving average like this, we call it the golden cross. And on the flip side, when it comes, I don't know where it is, but when it comes back through down to the downside, we call it the death cross. It means it's bad. So when this moving average is above that moving average, the 50 is above the 200, it's a buy. But when I'm investing, so for example, I'm loading my account monthly with money to add to my existing investments, right? And I've got quite a number of shares that are owned, for example, right? But now I want to, in the future, add to those trades. I don't want to add to them now. And my main reason for not adding in the markets right now, specifically the American market, is because of this. Because of this. Because of this scenario with the S&P 500. This is at the highest level it's ever been. It's really expensive. So what I'm waiting for before I add to my investments is for this to come back a little bit. And then I'll start looking at adding to my investments, because my investments, I put money in and I look away. I never look back. I look away. Unless, of course, something starts crashing. In that case, I'll sell the whole investment and put it into something else. So investments are really not so much a technical purchase as more of a fundamental purchase. You've got to look at what companies you like. Also, what you need to do is you need to look at not having 5 banks, for example, or not having 5 food companies, for example. So split it up. Have a tech company, have a bank, have an insurance company, have a food retailer, etc., or a clothing retailer. Split your shares up when you're investing as well. It actually helps. It does, because if one goes down, it stays in a good place. So yeah, that's just my 10 cents worth on investing. What I can do as well is I'll maybe put a whole video together for that in the future that you can have a look at, and you can get an idea of how to invest in the market. I think I have done one actually before. Do you refine your entry on the lower time frame charts? I call it a sniper entry. You can, and I do. The big thing with a sniper entry is, for example, if you go to the 5-minute chart, you must remember every single candle is only valid for the next candle. And what it does is, if you go too far down, it does take away from the whole trade. But for example, on something like, let's say you're trading on the 4-hour on gold, you've looked at the day, you've got your day levels, because I always take the daily levels, are the most reliable. Then I look at the 4-hour chart that I'm trading on, and I take my levels on the 4-hour chart. If I can't find an entry on the 4-hour chart, then I will drop to, say, the 30 minutes or the 1 hour, and see what kind of levels we've got available to us there. And then that'll give me a sniper entry. So for example, you could have got in a bit earlier over here rather than waiting all the way until there. You could have started trading in at a much earlier level. But then you've got to remember, you are actually trading on the 30-minute chart, and things can change in the 30-minute chart. That's why I say, if you move it all the way down to the 5-minute chart, for example, then you actually are trading. You could have traded in much earlier, but you actually are trading on the 5-minute principle, which means you could be getting in and out quite a few times on the 5-minute principle. It could be failing on you, whatever the case. It's not a reliable way of trading, let me put it that way. Not a reliable way, but it's a reliable way to get a sniper entry. My thoughts are on what I'll do is, like I say, if I'm trading on the 4-hour, what I will normally do is, best case scenario, is actually take it back to, say, the 1 hour, just to see if there's a better entry on the 1 hour, which is only one time frame away, just like the day is for the higher side. And then I'll look for my sniper entry over there if I'm looking for one. But you must remember, this trade is from this morning, so I wasn't looking for a sniper entry. In fact, I wasn't even out of bed yet. So this came into play nicely at the right time of the day. So you take the trade in any old event. But for example, if you're looking for a trade on this euro US dollar, you might want to go drop down to the 1 hour. And then you can see here, you really haven't got a long trade here yet, but it's starting to produce. So you might say, well, I'm a bit impatient. Let me drop down to the 30 minutes. Not much happening there either. But you get what I mean. If it starts to show up, you might start to get the trade. So it's a sniper entry. It's, if you're impatient and you want to get into the trade, maybe you've got something else you want to go and do, nothing wrong with doing that. You can get in and check that out as well. It's a good way to get your sniper entries in and that sort of thing. Okay, so where are we with everything? Right. Okay, what were we talking about here? Actually, no. The prop firm challenge is not going well. Look, it's my own fault at the end of the day because let's be perfectly honest, I haven't really been watching it that closely. But I did take a couple of trades on it here and there, and I've taken 2 trades now. I actually got it back up to the 25,000 on Friday, Thursday. Was it Wednesday? I can't remember. And then I messed it up totally. Took a few trades and they all went wrong, and we lost $500 again. So it's a $25,000 account. It's about $500 down, maybe a bit more. 24,436, $550 down. It's losing at the moment. What I'm finding with a funded trader account is you can't take enough trades and you can't take enough risk. So I'm working around it and I'm working on how to make it a little bit better for everyone, because that's why I took the account on in the first place. Because a lot of guys were complaining that it was, or not complaining, but saying that it's difficult to do our structures or our risk structures and all that with these funded trader accounts. Now, I did find a way to work around the risk. For example, you can lose $1,000 on this account in a day, I think, and $2,500 in total. But what I find is, if you've got a trade running, this time thing is also a problem. So if you've got a trade running and it's losing, and then you've got another trade running and it starts losing, you've got to start worrying about reaching the threshold, because if you reach the drawdown threshold, they kick you out of the whole system. So it's held me back. It's held me back. And also, I find that when I'm concentrating on real trades, that I don't really bother sometimes coming back. I forget about this account almost, and I don't really bother coming back and taking the trades with it. So it's a bit unfortunate as well. But the trades that I have taken with it, I mean, it's not a disaster. I mean, we've had the account for quite a while already, but it's not winning yet. So not a big deal. It will probably succeed in the end. But as I say, there's 2 trades open on it now. I took a trade this morning because I remembered we're doing this today. And I took a trade on it yesterday because I thought I would anyway. And yeah, but no, it's it's not winning yet. No, not at all. Not at all. It needs some work. But I actually thought about it, and I've been thinking about it at length, and I've been thinking maybe what I'll do with this is yeah, I don't know how I can copy trade it from my other stuff, but maybe just take some more trades with it and just see what it does. But I'm taking less trades with it based on the fact that it actually psychologically affects you that it might just get closed down. So you kind of don't want to take too many risks with it, or whatever the case. But at the moment, it's $500 down, almost break even for me. And I'm taking $250 risks on every trade. So it's won some, it's lost some. And this is a classic example of win rate, where I said to you, win rate is meaningless. I've got a high win rate on this account, and it's actually losing. So, there you go. And that's because of stop losses being moved around. So you move the stop loss up into break even and take profit, and then it takes it out and it shows a small profit. So, but yeah, it's not something that can't work. Yeah, it's not winning yet. Okay. You see what I do on a live account. You see, because what you've got with a prop firm is they allow you a maximum of 4%, and that's it, right? But with a live account, if I can take 20 trades at $1,000 risk each on a $100,000 account, I'll take it. And that's a 20% risk on the account. I'll take that. But you've got to understand that with a live account, you've got a much better option, because that $1,000 per trade is covered over 20 trades. The chances of you losing all 20 trades are just phenomenal. I mean, it shouldn't happen. And so the way I look at it is, yes, I've risked 20% of the account, but I've risked it over 20 different trades. So in that event, 10 should win, 10 might lose. I should end up profitable at the end of the day. So I'll risk a hell of a lot more on a real account, percentage-wise, based on the fact that I know those trades should win. But I won't risk it on one trade. Each individual trade's 1%. Each individual trade. So if it's a $100,000 account, $1,000, that's it. That's the maximum risk on each individual trade. But over a period of 20 trades, I'll risk that $1,000 in each and every trade. I'll risk 20% of the account if I have to, but over much more trades. On the prop firm, yeah, that's, like I say, that's more complicated because they limit you down per day. So you don't have that freedom to make a much bigger loss. You see, because with an account, let's say you open a $100,000 account with real money. Let's say you lose that $20,000. You've got the opportunity to make it back. They don't close your account down, it's your money. Whereas with the funded trader, it psychologically holds you back because the account gets shut down and you can't play with it anymore. So that's the problem with these funded trader accounts. But there's nothing you can do about that. That's the way they work. That's their rules. And some of them have got even more crazy, stringent rules these days. And I do concern myself with that. But yeah, these guys are not too bad. Funded trader markets, they do tend to allow you a lot, allow you to do your own things. So yeah, it's not the worst. The link for these guys is also down there if you want them, if you're interested in them. But like I say, I'm still working out the funded trader thing. When it came about and I saw it come onto the internet, I thought it was maybe a fantastic thing, but I'm not sure anymore. I really don't know if it's a good thing or not. If it works for people or if it doesn't work for people. There's a few people out there that have said, we got good payouts and we passed our challenges, but so many people out there are reckoning they've done like 20, 30 challenges and they still haven't passed, or they only pass after 20 challenges and all this type of thing. I don't know why. I think that's just the way they take their risk, or maybe they're trading 5-minute charts or something like that, because this is the first challenge that I've ever attempted because I wanted to see what it's all about. And well, we haven't failed it. It's just not going anywhere at the moment, but we'll see. We'll see how that goes. So hopefully that answers your question there and gives you the information that you need. So guys, that's today's live session, and then we've got the normal videos coming out on the Wednesday, normal videos coming out on the Friday. Someone actually commented that same video every day, man. Geez. I was like, well, if you're making money, it's boring. You're not, I can't change the system. I can't change how you trade. I can't make the videos different because then I'll be telling you something different every single time as well. We've got to trade the same way. So every video I make, I'm going to show you how to trade the same way with the same psychology. I'm not going to change the approach. I'm not going to change the psychological approach. So the videos are going to be similar. So when the guy says same videos every day, I can only laugh because that's the trouble. People want this instant gratification. They want to change it all the time. Must change it to something new. Must be something different. And they don't understand that if you're going to make money, be consistent and be patient, and it's going to be boring. It's not going to be exciting making the money. What's exciting about making the money is spending it and having a bit of fun, going out, enjoying yourself, and having the security of having a rather large sum of money in your bank account. That's what the fun part is about the money. Making it, doing it this way is better than going to work as an accountant or something. But yeah, this is not meant to be the fun part. This is meant to be the drag. But yeah, thanks guys. I want to say thanks for coming and watching again. We'll be back on Thursday with another live show. But yeah, what is that? Well, they don't have to watch. Thanks, mate. Okay, great. Now that's true. You know, when the guy says, "Yeah, same video all the time," you're right. They don't have to watch if they don't want to. I just find it rather hilarious that people think that way. That they think that, you know, yeah, if it's the same, then there's something wrong. No, if it's the same, it's consistent. It's that's how you make money, guys. Being consistent, being boring is how you make money. But guys, once again, thank you so much for watching. Harvey, nice to meet you too. Thanks for coming, and I hope you come again. I hope you guys come to the next show and join me. Um, the random coding channel, we will talk about pivot points in the next video because it is time for me to go and I'm getting caught up here. So guys, thanks, and I'll definitely be back soon. Cheers. Hope you have a great trading day, by the way, and have a good week, and see you on Thursday again, and obviously in the recorded video tomorrow. Cheers, guys.